So let's say you really want to become a great trader, and there's all this noise, all this trading education out there for you to consume, but you're not sure who to follow. You're not confident that what you might learn will actually work. Well, in this video, we're going to help you with that. We're going to share a trade made by a pro trader, in this case a junior trader on our proprietary trading desk in New York City, that spurred his most profitable trading day ever. Stick around. You're about to learn a powerful trade used by a junior trader on our desk that was the reason for his very best P&L trading session ever. Hi, I'm Mike Bellafiore, managing partner of SMB Capital, a proprietary trading firm located in Midtown Manhattan. I'm also the author of the trading classic One Good Trade and the Playbook. Click our subscribe button so you don't miss any of our trading videos produced for the trading community. In this video, you're going to learn how to make a powerful and easy to learn technical trade. This video will also teach you how to, quote, fight for price, unquote, an effective trade for large cap stocks, how to use ETF indicators to make better trade decisions, how to put variables together, more variables together to make a good trade, a professional trade, and how to think through a trade like a pro. So stick around and learn the setup that spurred one of our junior traders' most profitable trading days ever. If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar we're currently running. Just go ahead and click the link above. That will open up the free registration page in a new window. So don't worry, you won't lose this video. So go ahead and do it now before you forget. You're going to learn more in a couple of hours from this trading workshop than from years of online education. Let's go over a large cap momentum stock technical breakdown trade. At our firm, we believe that junior traders also can teach. You can see right here, a junior trader on our desk had his best month ever last month. And in this trade, he actually had his best day ever from the trade that we're going to talk about. We believe our teaching philosophy is that junior traders can also play an important role in teaching our newest traders, partners, our floor manager, senior traders, our trading coach, Dr. Steenbarger, teach. But we also lean on junior traders to contribute to the learning for our newest traders and for all of our traders. Teaching helps make traders better, as they must crystallize the reasoning for their trades. Senior traders can learn from junior traders. Junior traders can teach senior traders. Junior traders can teach newer traders. We can all learn from each other. So we're going to learn a great trade from a junior trader. And I hope you remember that we can learn from lots of different people. And if you're a junior trader out there, I hope we can learn from you. Trade strategy. So when I think about a trade, I think about a name for the trade. I think about the specific trade. I'm having a conversation to myself when I'm in a trade. This is a technical breakdown trade. This is an opening drive trade. This is a changing fundamentals trade. This is a second day play. This is a breaking news trade. This is an ARB trade. This is a gap and go trade. They all have names. And I am building playbook trades that have strategies as to how to trade those playbooks. And I'm building my business from these very specific playbook trades. So I want to have a trade strategy for this particular trade. I don't want to just sort of have to figure all this out in the middle of a trade. That's too hard. I want to be thinking about maybe 1 or 2 things and focusing on them intensively and not have to think about 8, 9, 10 things at the same time. And I find that junior traders are sometimes lost. They're like, what kind of trade is this? Should I be in it? Is this a good? You don't want to be that way. You want to be like, yeah, this is a good trade. I'm putting it on. I'm putting risk on because it's a trade in my playbook, and I've got a strategy to trade it, and I'm executing on it. So we want to see in this particular trade a very significant technical level for large caps. Large caps are a little bit harder to trade at times because there's so many HFTs in them. There's so many false starts. There's so many shakeouts. So we got to make sure that the technical level we're trading off of is very significant. If you were to give a chart a grade on a scale of 1 to 10, I want to think about trading charts that should give a 7 or 8 and better on to think about making this trade. You want to have a news catalyst, and we do in this case. We want overbought conditions on our daily chart. Remember, this is a technical momentum stock breakdown trade. So the momentum in this case is too hot. The momentum name has too many people that own it and are trapped on the long side. And sometimes in marketplaces, people have to buy stocks if you're a portfolio manager or a hedge fund trader, because you can't get left behind and you can't underperform. And these stocks and certain players chase momentum because they kind of have to. You want to see increased volume into the breakdown. Very significant, and we'll show you that. You want to see a weak bounce below that important technical level, an important 7 or better at a 10 technical level. You want to see declining volume on a retracement, elevated R-vol. We talk about that a lot. Some of the elite traders that I work with do not touch stocks that do not have elevated R-vol. So if you hear me talk about that time and time again, that's why I do it. It's because the guys that are doing the best, they're using it. And we want to talk about how to scale out of the trade by using ATR, average true range, intraday. Big picture for the stock. AMD has been a leader in the semiconductor space. There are many big players that have the stock in their portfolios. They may be stuck. They may be caught. This is a large cap momentum stock and it has been all year. It's been trading in a range between 30 and 34 for 2 weeks. And AMD breaks 30 on a negative news catalyst. So we don't just have a really important technical level. And it's not just that it's a momentum stock where the momentum can come out of it, but there's also a news catalyst. Put variables together to make excellent trades. This is your business. Craft quality trades. So the news catalyst in this particular opportunity, shares of Intel were up nearly 5% after a research report said that a long-time chip industry leader could ramp up production. This long-term Intel could ramp up production of its processors sooner than expected. Intel's second half production levels suggest upside to analyst revenue estimates. Previously, it was believed that Intel would not be able to make enough processors to meet their expected revenue. So analysts believe that Intel's shortage would boost AMD's market share. And they believe this in the high-end commercial desktop and server markets. Shares of AMD were down 3.6% in the wake of this news. So shorthand version, you've got unexpected, significant, unusual, negative news. That brings out sellers in of itself. Intraday fundamentals for the stock. ATR is 1.8. Average daily volume is 157 million. RVOL elevated 3.4. Short float 15%. Institutional ownership 72.29%. I like the idea of you getting into the habit of putting these statistics down and knowing them before each trade. All right, AMD for the year, when we take a look at our daily charts, AMD has been the leader in the semiconductor space for the year. Strong uptrend on the daily chart. This is a large cap momentum stock leading its sector. And when you look at that chart and look at its move from the middle of August, you've got something that's almost doubled in a thick stock. It is vertical. It is parabolic. It is hot. It is too hot. Big players need this stock in their portfolio, and they're trapped long. So AMD has been range bound for 2 weeks, trading between 30 and 34. 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 So we like that. It's clear to see 30 is a huge level. Bounces off of it. Comes into it, doesn't get near it. Bounces off of it. Doesn't get below it. Multiple tests of 30. Multiple tests of 30. And really holding well. The last significant up move, when it got above 30, psychology to the upside, in its last up move started above 30. Okay, so we do have a level that we would rate on a scale of 1 to 10 as 7 or better. I think I would give this an 8. Let's give this an 8. This is an 8 out of 10 in terms of technical, significant levels. It's a big level. And we need that when we're going to trade large caps. Okay, so our junior guys here actually put these charts together for me. And I love what one of our newest guys did when he put together this playbook trade for his own. So when you are trading a large cap stock, you want to go find the ETF that makes the most sense to follow. You want to find the ETF that you can use as an indicator to give you more information about whether or not to make the trade, to stay in the trade, how big to be in the trade. And so one of our junior guys does a great job of going and finding SMH. SMH is the ETF that you should be hawking as you are also trading AMD to give yourself more information. And I love what he did by placing AMD next to how SMH is doing. How does SMH respond when AMD gets below 30? How do the Qs respond when SMH gets below 30? So let's use an ETF and let's take a look at our market tracking ETF as well. The Qs are going to track technology stocks as well. So let's put that together. Let's not just look at one chart, but let's put things together to make better trade decisions. So for example, if you were thinking about shorting AMD below 30 and SMH was breaking out to 52-week highs, that would be huge information. That you might pass on that trade. If AMD spiked down and it was a little bit too vertical and you saw that, and then SMH jumped above VWAP and started to look strong for the day, that might give you a reason to cover. Same thing with Qs. If AMD is cratering and looks like it potentially could be near a bottom and the Qs are breaking to the upside, that may give you information to cover. And on the flip side of that, if SMH is real weak and AMD is showing you weakness as well, and the Qs are showing you weakness as well, that can give you more information to stay in the trade. Maybe you'll add to the trade. Maybe you'll lighten up into the down moves a little bit less than you would. All right, great job here. So recently, Unsolved Misery wrote to me, can you do a deep dive video on SMB YouTube channel into your concept of, quote, fighting for price? Thank you. And I said, I'm going to do a video on AMD this week, and I'll make sure to include a section on fighting for price. So thanks to Unsolved Misery for the suggestion, and here's your answer. Before I give you the answer, I want to put fight for price in context. The elite traders that I work with, we talk about thesis plus setup from your playbook, plus confirmation on the tape, plus fight for price equals one good trade. You need all of them together to make one good trade. And the elite traders that I work with, when they're underperforming, tend to skip one of these variables. So sometimes they've got a good thesis, and they find a setup, and they see some good confirmation on the tape, but they don't fight for price. And what do we mean by fight for price? If our short is below the significant technical support level, 30, we want to make sure that we short that stock real close to 30. We don't want to short that stock at sloppy prices. We don't want to be shorting that stock too far away from the breakout price. And if you do that, that leads to bad trading. And so I'm constantly talking to the guys here at a proprietary desk in New York, passing them on the hallways, sharing daily report cards with me, seeing them in the bathrooms. And one of the things that guys talk about a lot is, all right, I got into a trade, but I got it at a bad price. And you can see the angst on their face. They know it's sloppy. Good trades don't just have a good idea behind them, but they're executed at really good prices. If you execute at a poor price, you're completely changing the risk versus the reward. If we want to short this below 30, a thick stock like this AMD, we literally want to get into our position within 10 cents. 5 cents is even better. And I'm saying that even if you want to trade this big, even if you want to get to the point where you're slinging around 100,000 shares, you want to get in within 10 cents. You don't want to be shorting this at 29.50, because now you start your risk reward from 29.50 as opposed to 29.95. You're giving yourself 45 cents of cushion on the risk analysis by getting in at better prices. And look, guys who want to trade big tend to be doing a lot of things at the same time as well. They tend to be looking at a lot of different stocks. And so it's easy for them to get in at some bad prices. And so it's easy for them to struggle from day to day because they don't fight for price. And if these guys, these elite traders, are fighting for price, and it's so important for them, and it really makes a difference between when they're trading their best and when they're underperforming, then it ought to be for you as well. It's a huge, huge differentiator. All right, so AMD breaks 30 on high volume. All right, so when we break a level, the first thing we want to check as it's getting ready to break the level is, do we have RVOL? Do we have elevated RVOL? RVOL elevated means the stock's in play. And we want to be trading large caps when it's really in play. In this case, we did. And then when it breaks that support level, again, the elite guys I work with, they look at volume. Volume increasing into the break is significant. Your best breakdown trades are going to get that increased volume. All right, so we want to immediately look. All right, I'm short below 30. Does the volume come in? Do I get a push away from price? What's the down move look like? Yeah, if we think 30 is a big technical level, and when it gets below there, the trade's going to really work, and it goes down 5 cents and 10 cents, and there's pretty good buying on the bid, that's not a good sign. We want that stock to move away from price, and we want it to move away from price on big volume. You want it to go down a little bit further than you would think even. All right, so you get that. You get a pretty big move in a $30 stock initially. And then you want to see a very shallow pullback. You want to see a very weak retracement. Depending on if I'm just talking about breakout trades in general. You want to see a very weak retracement. You don't want to see it go up very much. If it's really, really weak, this is such a really big level, and it's going to be such a great big trade, I don't want to see it go back up to 30. I want to see it hold lower. I want to see a lower high. That's what I want to see. On the up move, I want to see volume wane. I don't want to see into that retracement volume picking up. I want volume increasing on the way down. I want to see into the retracement volume waning, declining. All right, so we're going to tier 1 in. In this case, you got a real good trade decision. So again, these slides are put together by our junior guys, and our junior guy decided tier 1, tier 2, tier 3. I can tell you that the junior trader who got us to talk about this trade, he went in full size right when it got below 30. So you have a trade decision. You can start this big right here when it gets below 30, or you can, and I think this is a better way for developing guys to trade it. You tier 1 into it. Okay, it's working. It's consolidating. You tier 2 into it. Okay, it's working. You tier 3 into it, meaning you size up as this trade is actually working. Okay, I think a better way to do this is tier 1 right below 30, tier 2 when it's holding, and then when it breaks this consolidation, tier 3, and go for it that way. All right, an easy way to exit this trade is to look at a higher time frame chart. The downtrend breaks on a 5-minute, and you have a cover decision. Or you think about ATRs. So remember that ATR in this particular case for our stock was about 1.8. And so what you want to think about is covering based on a percentage of ATR. So 50% of an ATR, start working on a trade decision. All right? 75% of an ATR, start thinking about a trade decision. And scaling out, this is a thick stock. It's not likely it's going to make more than one ATR move below that important technical level. So you're thinking, best case scenario, this stock can get to about 28.20. There's not a lot of time left in the day as well, right? There's only 2 hours left in the day, so it's not even likely that it could really do that. As you gain a little bit more experience, $1.50 is a pretty big move. That's about what you're going to get. And so when you have that as a target, as the stock is pulling in towards that $1.50 target, you want to lighten up and you want to have rules that you develop from your trading system as to how you're taking off and locking in profits. Okay? What I love about the stock is it's a large cap. You can trade this almost as big as you possibly can think. You literally can sling around, the younger guys can sling around 10,000 shares and get good prices. The more experienced guys can sling around 100,000 shares with no problem. And look, there's a lot of money in this stuff. So just make sure you get the variables right, because these stocks need very significant technical levels to work. All right, so what we learned? We learned how to fight for price. Thanks for the question on Twitter. We learned a technical momentum breakdown trade. We learned an effective trade for large caps. We love trading large caps because we can trade a lot of size with them. They're liquid. We learned how to use ETFs as indicators. We learned how to put variables together to make a good trade. I see underperformance from a lot of guys in the audience because they're not putting enough variables together. Put more variables together. Be more specific with your trading. The best guys that I work with, They're extremely detailed with the variables that go into their trading. They say, I am trading an opening drives trade. That's my bread and butter. They tell me the variables specifically that they want to see for their opening drive play. They can tell me why they didn't make good opening drive plays because a couple of variables were missing. They can self-check themselves at a moment's notice because they don't have enough variables. They're not being specific enough. The best traders are detailed, detailed, detailed. And you also learn how to think through a trade. And I always hope that the biggest takeaway from videos that we do for you guys is that you learn to think through a trade like a pro. Go ahead and click our subscribe button so you don't miss any of the trading videos produced for the trading community. Please add your feedback in the comments section below for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, trade well.